Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then. Kalra of Target Investing, Vinit Bolinjkar of Ventura Securities, and T.S. Harihar of HRBV Client Solution join me on the show. Many thanks to all of my guests for joining me. Today on Hot Money, among the various stocks that we'll discuss, first we'll discuss Page Industries. Is the worst over for Page Industries? We talked to our analyst about what to expect after the stock hit its 52-week low post a muted first quarter. Next, we'll talk about Sun Pharma. The company has received a clean sheet from the SEBI in terms of the alleged fraud case, and this has been reported by Business Standard. The stock has, however, dropped almost 30% during the investigation. We discuss for how long will the overhang affect the stock with our analyst. Next, we find out which of the diagnostic players our analysts like the most and why, because counters like Metropolis and Dr. Lal Path Labs are trading at 52-week high. And finally, we see what should one do between HDFC AMC and Reliance Nippon AMC. And surprisingly, if you look at the Nifty 500 for the YTD gains, the top two gainers are HDFC AMC and Reliance Nippon. So which is a better bet at this point of time? The first stock that we want to discuss is Page Industries. Has corrected massively from the highs, and the highs it had was in the range of almost 33,000. It's almost become half of that level, and the selling actually continues. Is it now the right time to start accumulating Page Industries? Valuations have almost half from those levels, or is there more concern for the counter going ahead? That's something that we will discuss with our guest at this point of time. Hari, I'll start with you. What's your sense on Page Industries? At 25, 30, everyone liked Page Industries. Now at 18,000, people are now afraid of buying Page Industries. What should one do?
Not surprising, because what has happened is the so-called growth assumption that this company actually used to enjoy those valuations when it was 35,000. I think those growth assumptions come under question. If you look at the last 2 quarters, I think there has been a big constraint on growth, and the outlook for the industry does not seem to be too good. And at the end of the day, it is a consumption story. So, if the consumption spending is going down, I think that is one sector that is going to get hit. Even now, after all this correction, I think the stock is still at about 50 times earnings. So I don't think it's a stock that is very cheap at these prices. And especially we have seen in the auto sector, the stocks correct 40-50%, and then we realize that the sales growth has been wound down, and then even at that price it starts looking expensive. So I think it's a similar kind of a situation with Page Industries. Maybe as a stock it is still good, I'm not saying no, but I think once the growth gets rewound lower, I would be very cautious about buying the stock at these prices. So for me, I think Page Industries is something that's got to be avoided.
So I think valuation wise, at one point it was trading in excess. It had valuations in excess of 100 times. You think that it was the management which overestimated their sales and the guidance that they gave, or was it the market that actually overestimated what Page could actually do?
I think it was a mix of both. Not only Page Industries, but if you look at across the Indian spectrum, from auto to telecom, I think all the management stocked up projections. There is no exception to that. And of course, willfully fund managers bought the story. Investors also bought the story. So I don't think probably anybody is to blame. It was kind of a mutually acceptable story. In my view, I think it's a reality time for all the companies, be it Page, be it autos, be it banks. So once you get to reality, I think your 100 times valuations, forget about that, even 50 times I think looks very steep. So I would believe all these need to come down to 20-25 times valuations where they can sustain about 15% growth. I think that's a more reasonable kind of a number for this company.
Okay, Samir, it's corrected significantly. If someone is looking to take position in Page, let's say for a 2-3 year or probably a 5 year perspective, would you advise taking at this level? And what according to you went wrong for Page that it fell from 33,000 to 18,000?
So, if you see the valuations of 100, 105 multiples were going on till the time they were able to show that 30-35% kind of a PAT growth and the revenue growth. 3 quarters back, the growth started tapering off. It was first blame on the inventory, then the cyclical issues. And last quarter, it really tapered off into lower single digits. So I think now, till the time the quarterly numbers don't show that kind of a 15-20% kind of a growth on the PAT and the revenue, I don't think so it will have the space to move up from here. The space can be further downside till the time that correction keeps on happening on the levels. So I think it's better to avoid it as of now.
Okay, you think that competition is one more factor? If you do a market check, do you think that the entire sector is in a slowdown, or competition is picking up and that will impact Page even further?
So I think in terms of the growth of the competition and the market, I think if you talk about that men's underwear index, that shows that downfall in the system. Now, what reason is that downfall? I really don't know about that. But I rather, if I'm looking to take a position in Page out of the whole competition, it's better off in terms of balance sheets as of now, whatever stands. So I think it'll be better off even in the reversal time. So I rather look for a quarterly number reversal in Page rather than anyone else.
Okay, and post that only will you take any call at this point of time. Vinit, is that the similar sense that you sense, or you think that the worst is over for Page now?
No, the worst is not over for Page.
Okay.
I think the company is suffering from what we call growing pains, So you grew at very heady growth rates, and what happened is that it attracted more incumbents. Because I remember in my conversation with one of its competitors, which has recently gone heavily in the innerwear industry, they were talking about the valuations they would get even if they do 500 crores of sales, to add to their market cap. So there are a slew of factors which are impacting Page. One is that the 57% of its portfolio is coming from athleisure and innerwear of our women. So that market they have yet to still perfect the product, and they've gone out to set up their own chain of branded stores, and their EBOs and their middlemen are kind of locked up due to the non-availability of credit. Also, the demand has collapsed. So when you've grown so aggressively, even if we had a good market, the valuations would have come out because they were expensive, even at those values. So we had a fair value considering steady state growth of about 25,000. So now when that growth is halved, obviously the pricing will take a hit. And more than growth halving, growth has come out flat. So, and we have seen gross margins go down from 63 to 55%. Obviously that can be because of change in product mix and all that. But EBITDA margins have come off a little bit. So I think we are seeing that demand debacle hit, and because of its overvaluation is leading to much more pain and stress. But in the long run, I think the brand is very great, and I think around prices about 10,000, 11,000, the stock will start becoming attractive again.
So you see another 50% downside in Page. Is it possible?
So you're at 41 times even now. Okay, and when you start growing at single digit top line growth, obviously your bottom line growth will come to 10 to 15%. And given the way the demand is not coming back immediately, so there could be a lot of pain. So where is the margin of safety for me to buy the business? Anyways, I'm seeing the business kind of there are too many moving parts, as I told you. So competition, product mix, and dealer stabilization are important things, distribution. So there are too many inner parts. So intrinsic problems are there as well as extrinsic challenges. So I think I don't want to buy this stock at these levels. I will buy this stock when the market comes off quite a bit.
Okay, that's the view that's coming in on Page Industries. I think the consensus view is there could be more potential downside even for a slightly longer term perspective. Wait before the numbers actually show up, the growth shows up, and that is the time you buy. There could be more potential downside on Page Industries. The next one is Sun Pharma. Now this is a source-based news that came out in Business Standard, where SEBI has indicated that they have given a clean chit for Sun Pharma in terms of the whistleblower allegations. There were two issues in which there were clarity needed. First of all, the diversion of the 42,000 crores through Aditya Medicine, which was the distribution arm, and the second was the fundraising plan in 2004 via their foreign convertible currency bonds. So those were the two issues. Sun Pharma has gone ahead, and SEBI says that the matter does not require any further probe. Now remember, this is Business Standard reports. This is not officially come out from Sun Pharma, nor has it come out from SEBI, but the counter seems to be rather active in trade over the past few days. It has gained heavily. It has made some changes in terms of hiving of Aditya Medicines, and a lot of clarity has come in, and business itself, though no doubt, is seeing a slowdown. But we'll ask our guest whether the big drop that it had because of these whistleblower allegation, will Sun Pharma be able to make up most of that drop that is there, and is it the stock to start accumulating at this point of time? I mean, I think in the pharma space you like Sun Pharma, you've been vocal about it. Does this put to rest a lot of issues that are there? One, and secondly, do you think that the business wise Are things going to get better for Sun Pharma?
So I think as per the allegations and the SEBI inquiry and everything is related. If you see till Q1, they had promised to rectify all the changes, and which they have done. So Q4 and Q1 saw some financial impact of that restructuring. So I think that SEBI report or the final report is more of a formality for me, at least as an investor, because whatever was wrong in the system, at least accepted by the management or SEBI inquiry, that has been rectified. So I think even if it comes at a midway kind of a report, not totally in favor of Sun Pharma and further information is related, I think now that report importance is reduced. So it cannot be a factor for a more downside. So earlier it was the major factor of a downside because of the allegations by the investors and the whole restructuring. Secondly, if you see on the business side, they firstly disclosed the specialty sales, which was around $94 million. So that is picking up pace according to me. The launches are getting more improved. The plans are almost all clear by US FDA. And the China collaboration which they are doing on the generics. So that helps out their generic business, which is their cash cow. So if that is able to move up in Q2, Q3 onwards, then I think it has more upside. And the SEBI overhang might create a small downside even if it comes negative. So I think keeping SEBI out, I think there are a lot of positive factors now on rather than negative.
Have you been advising your clients to buy Sun Pharma?
We've been accumulating at a smaller tranches because I still feel Q2 and Q3 will have certain variations because US generic prices have flattened out, but they are not moving up right now. So I would wait till that index moves up.
Now, Vinit, what's your sense on Sun Pharma? Is this the best play in the pharma space? What's your view on this?
So, to my mind, it's fairly valued. Okay, last year we saw a very bad year, and if you just take the Q1 of FY20 as a representative number, then you're looking at ROEs going up to steady state, which is about 12 to 13%. Now, all its peers are around those kind of valuations. ROEs of around 12 to 14% and PE of about 17 to 19. Okay, so given that fact, there is not much to choose from. I think it's very fairly valued, and considering these factors, we would like to go with Alchem Labs, where we have got a high conviction buy.
Okay, why do you like Alchem? Any reason?
So a couple of things is that lifestyle diseases portfolio is growing very fast domestically. It's the fastest growing sector. They did not have too much presence. Internationally, they launched a number of ANDAs. Those are growing. So we expect top line and bottom line to grow at about 13-14%. There is that kind of growth coming.
And for Sun Pharma, coming back to it, do you think there could be more potential if someone is looking to accumulate Sun Pharma, let's say for the next 2 years? Is this the right time, or do you feel that there could be more potential bad news coming in? The performance probably won't improve on the financial side.
So one overhang is that collusion of 2004 pricing, cartel.
Okay.
So that's a fine of $2 billion, which the company could probably get hit by. Okay. Second is if this business standard report were actually to turn adverse. So to my mind, while this the whistleblower case has been more or less, both of these are factored into price, yet that 2 billion is a fairly large amount.
Okay. Hari, what's your sense on Sun Pharma? You like it?
See, I think I'm not sure if performance-wise they have bottomed, but definitely I think sentiment-wise they seem to have bottomed out. A couple of reasons. I think leaving aside whatever we've been hearing on the SEBI front, what is true is that in the last 2 years, Sun Pharma has been very careful to handle the corporate governance issues with a lot more sensitivity. Just take 2 examples. They got out of the NBFC business altogether. I think that was a very good move because that is where most of the problems started when Walia had all these ideas about making a big NBFC franchise. That was the beginning of the problem. Now the second was the Aditya Medisales, where they had structured it as a subsidiary and then sales were routed. So I think that was a very, very, I would say, opaque structure. They've got out of that, absorbed it. So I think the 2 major issues that raise corporate governance issues have been addressed. Let's not forget that Sun Pharma correction actually started in 2015 December. So from there, the stock is down, I think, about 75 or 76%. So in terms of business, I would believe that there were huge issues in terms of sanitation, in terms of the way they did the testing labs. I think all that has been resolved. So I would probably believe that sentiment-wise, yes. Business-wise, we still need to look at the next 2 quarters. But I would believe anybody with a slightly longer-term perspective, considering that most of the cyclicals are doing so badly, I think Sun Pharma seems to be a fairly good bet.
Okay, that's the view that's coming in on Sun Pharma at this point of time. Vinit prefers Alchem at this point of time. But no doubt, price-wise, I think what the general view is there could be very less potential downside on Sun Pharma. A lot of rectification has done. The third part we want to discuss is interesting. It's the diagnostic space, which actually now has become, the forefront as far as the pharma investment is concerned. Because if you take a look at the year-to-date performance, Dr. Lal as well as Metropolis are trading at new record highs. Thyrocare obviously has problems of its own. So if you take a look at the last 12 months itself, Thyrocare, Metropolis recently listed, but nevertheless a 37% uptick in Dr. Lal. Metropolis is up 32% since the listing in April. Thyrocare is down 14%. But remember, valuations are not cheap at this point of time. Both Metropolis and Dr. Lal are trading in excess of 40 times on an FY20 basis. Thyrocare has issues of its own. That's why it's trading cheaper, much expensive than most of the pharma space. So they seem to be outperforming the generic pharma, the couple of these MNC pharmas, as well as the hospital chain. So is diagnostic the space that you need to be in? Vinit, I know you don't track Metropolis, but you have a view on the space as a whole. Is this a space that one should put their money in?
So, rather than going with the diagnostic space, I would go with the hospital space.
Okay.
Because diagnostic leads to, further processes is going into the hospitalization. Given that, I think hospitals have got better margins, and hospital chains themselves will come out with diagnostic services, which can dampen the moats of these businesses. So to my mind, they're slightly expensively valued, although the runway is very big. So the industry is expected to grow at 15% for the next 10 years. And healthcare is becoming very proactive in the industry. So rather than going into these stocks, I would like to play the hospital stocks.
And which is the best pick there?
So we like Apollo Hospitals, and as a value buy, we like Aster DM.
Aster DM. Okay, what's your sense, Samir, on the diagnostic space? If you had to choose, what's the pecking order, which is the best, and which is what's the pecking order in this space?
So for me, Dr. Lal, Metropolis, and then Thyro. Thyro, as you said, has its own problems. And even if you see the balance sheet and the working capital, they deploy the highest working capital per their path lab. So I think for that, the cash flow generation is very low in Thyrocare. So I rather keep it out only. If you pick Dr. Lal and Metropolis, Dr. Lal per path lab, if you see the matrix, Dr. Lal has a better operational efficiency as well, and the OPEX is less per path lab. So I think, and Metropolis is showing good amount of growth, so that's why it's, even at the listing point, it was dominating with the highest valuation at that point of time compared to other two. So I think Dr. Lal has a better valuation growth from here on, even if they keep on adding the path labs, and their cash flow management is much better as per compared to Metropolis or a Thyrocare.
Okay, that's so you choose Dr. Lal, but you see more potential upside, or now you see that valuation is started to becoming a concern. 40 times obviously is not cheap.
Yeah, so when the valuations go a little aggressive on the forefront, I think it becomes more of a SIP mode investment kind of a system. I don't see any danger of any kind of corporate governance issues as of now. But when the valuations stretch off, even a small kind of a taper off in the growth system brings down the valuation. So I think do a SIP, don't do a lump sum right now, because the valuations might see a 10 to 15 kind of % correction.
Okay, Hari, what's your sense on the space as such, and if you had to choose, what would be a pecking order among the
See, broadly, our pecking order has been the same. In fact, we don't track Thyrocare, so I'm just putting it at the bottom. So the choice is more between Metropolis and Thyrocare and Dr. Lal. The only reason we are choosing Dr. Lal is that it has a longer track record. The Metropolis just got listed less than a year back, so I think that track record is much smaller. But that is the only probably reason we would be choosing Dr. Lal over Metropolis. I think 2-3 things. This is a very interesting space between a pharma company and I would say a hospital company, because the hospital is capital intensive. This is not so capital intensive. This is more of a working capital intensive business. And I think with the kind of growth we see in diagnostic, when you walk into any diagnostic lab today in India, you'll just find it packed with people at any point of time. So I think that's a business that has a great potential. Indians are realizing they need to be prophylactic rather than therapeutic. So people are going for tests, people are taking precautions. So I think this is a big business. I wouldn't worry too much about 40 times valuations, because I think that is it's a business that is probably at a very, very early stage. So I think 40 times is absolutely understandable. And let's not forget that Dr. Lal has the most aggressive growth plans in the entire industry. So we would clearly pitch for Dr. Lal over Metropolis at this point of time. Thyrocare is something we don't track, so we would put it at the bottom.
Okay, that's the view that's coming in. I think Dr. Lal seems to be the preferred pick, and then comes Metropolis. I think Thyrocare comes down the chain for all the guests. Finally, the last one, it's interesting. Speaking to Somit, and he'll tell us more about it. If you take a look at the NSE 500 on a YTD returns, the top two movers and the top biggest gainers are HDFC AMC and Reliance Nippon AMC, and both of them are doing well. HDFC AMC no doubt trading at record highs. What exactly is happening? What are the valuation and price move, and what's causing this move? Somit will give us more perspective on that. Somit?
Well, if you see for 2019, both the stocks have gained over 75%. Now, HDFC AMC has continued its rally from 2018. Now, in 2018, the stock was up nearly 37%. However, for Reliance Nippon, it was a downtrade at that time. Nearly it was down 47% in 2018. But that was because of two possible concerns. Firstly, the promoter, that is the Reliance Capital, the promoter, there was a lot of issues related to the promoter, and that was one of the key overhang. Along with that, the company also had intercorporate deposit, which was also a big overhang on the share price, and that's the reason we had seen that decline. But as of now, both these overhangs are out of the box for Reliance Nippon, and that's the reason we are seeing such kind of move coming in for the company. Along with that, what has aided the rally for both these asset management companies so far in 2019, firstly is the steady SIP flows. We are continuously seeing nearly 8,000 crore plus of SIP flows for the last 10 months. Along with that, both the asset management companies were able to pass through the impact of reduced total expense ratio. Nearly 80 to 90% of the total impact was passed through to the distributors by both these asset management companies, and on the back of these two factors, the financial performance for both the asset management companies have been strong so far in 2019, and these are the three reasons what has led to this kind of rally for the asset management companies so far in 2019.
Okay, thanks so much for that, Somit. TS, both of them are moving now. Reliance Nippon no longer an ADHE company, and that's why this entire move came in. Now, if someone had to make a choice between both, which one would be a better choice, and what's your view on the sector as well?
See, frankly, I would avoid both. See, because it's very hard to buy an AMC when mutual funds are in such deep problems. Your FMP is in trouble. Your equity there is down. SEBI is on their neck to reduce the cost of direct funds. I think TRs have been shot down. They're going to be shot down more. So I think everything that should not happen is actually happening to the AMC sector. So I fail to understand why the AMC stocks are really going up. It's slightly hard to understand. If you put the numbers, globally, if you look at it, AMC stocks are never valued based on the earnings of the P. They are more based on the AUM. And if you look at the AUM, let's say HDFC, for example, I think the market cap is around 55 to 60,000 crores. Yeah. And if you look at the AUM, it's about, I think, 3,60,000 crores. So you're looking at a valuation which is about 18% of AUM. Now, the normal benchmark is about 7 to 8% of AUM. So you have a AMC which is normally valued at 7 to 8% of AUM, currently quoting at 16% of AUM. So I think upsides to me from these levels look to be very, very difficult. So I would probably stay off HDFC. Relatively, I think RNAM is better valued, but my only concern is now Reliance is out. It's largely more of a Nomura business. And if you look at the history of global AMCs in India, every AMC has failed. Either they have failed or they have sold out. And the only one who has sustained is probably Templeton. So if you leave out Templeton, there is no other international AMC that has sustained. So I'm not sure how successful Nomura is going to be, and whether they can replicate the Nippon is going to be, and whether they can replicate the success of Reliance over the last 15 years in the next 10 years. So I would be skeptical about both these stocks.
Okay, what's your sense? Buy both, buy either, or buy none? Buy which one?
So I think buy into SIP through HDFC AMC. Okay. Two reasons. Given if you see the duration of 6 to 8 months, where debt crises were hitting, liquidity issues were there, HDFC AMC on the debt side increased their funds. So fund inflow over there was much higher as compared to the whole industry. So it's now taken as a safer fund house in terms of crisis. So I think even if you see a equity or a stock market crash coming up, or kind of a kind of a system going off, I think HDFC AMC will be preferred by investors as well. Secondly, the banking channel is much stronger to sell it. It's more of a pull strategy rather than a push strategy. So I think these two channels makes it much more better in terms of valuations. Yeah, it's higher in terms of as compared to the asset valuations, but I think it's better to put your money in HDFC AMC.
Okay, HDFC AMC is the preferred bet. Vinit, what's your sense on both of them?
So I think the financialization, is here to stay, and there would be very few players who would be able to generate the kind of returns that you require, especially in a downward trending interest rate scenario. So given that, I think both these stocks warrant attention. HDFC primarily because of its pedigree and performance and garnering of AUMs, and RNAM because Nippon is a very Japanese guys are very long-term players. So I think they would be quite they have been with Reliance for a fairly long period of time, and now they become complete owners, promoters. So I think both warrant a case, and going with an equal basket because RNAM is available at 33% discount to HDFC Bank.
But still buy HDFC AMC also.
Yes, definitely.
Okay, so that's the view that's coming in. I think Hari says that avoid both, but if you had to choose RNAM. What Samir is saying, buy HDFC AMC is preferred, while Vinit's view is that buy SIP in both, but RNAM provides a better scope. But with that, it's a wrap on today's edition of Hot Money. Let me thank my guests who've come in today. Thank you, Samir. Thank you, Vinit. Thank you, Hari, for coming in today. Ask BQ comes up next. Stay tuned to Bloomberg Quint.